Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc.
LME 3-month nickel. Now, I'll preface this commentary and in a way sum it up as well with these words. I said this situation was not going to last. The mid-June to early August bearish shift pitchfork, highlighted in dark blue on my daily chart, had shown the bearish angle of attack of this market, especially as prices over the last 5 weeks had moved down to test the lower time, currently at 18,100, as well as supports dating from 2019 and 2022 between 18,230 to 18,850. However, this pitchfork was last week being ripped by the forces from another pattern, a sister, if a more recent, bearish shift pitchfork. The August-based bearish shift pitchfork, highlighted in bright green on my daily chart, had since late August until the last 2 weeks also shown the bearish angle of attack, but only for the more recent action. It was when the upper tine of this bearish pitchfork met the lower tine of the original mid-June, early August bearish shift pitchfork that both the pitchforks started to suffer. As I said last week, and I quote, "Let me make this quite clear. Right now, neither of these pitchforks are going to come away from this crossover without some serious injuries." End of quote. And so it proved to be. I'd also like to gently remind you of my comments from 4 weeks ago when I spoke about the mid-June to early August bearish shift pitchfork, and I quote, "Until prices break out and below the lower tine, and properly with an absolute minimum of 2 consecutive closes below the tine, then this bearish shift pitchfork will run the angle of attack of this market." End of quote. Well, last week we had a midweek 3 consecutive closes below the lower tine. So why I'm not highlighting this in a positive way? Well, the reason we had these moves and closes below the lower tine was simply because the market was getting stretched, and it is also today, stretched between the dark blue bearish pitchfork and the more acute light green bearish pitchfork. Eventually something has to give way, and it was on last Friday that with a bullish above the stomach pattern that the market chose it seemed to choose the older mid-June to early August bearish shift pitchfork as the preeminent bearish angle of attack. I will retire the newer bright green pitchfork by next week's commentary. Possibly. Looking lower down, we have support at 17,810 from the October 2019 high, and again between 16,660 and 17,095, which has the June 2021 low at 17,095, and the May 2021 low at 16,610, and they're all getting tested. I said last week, and I quote, "I have a strong suspicion that some, if not all of these, may well be tested in the not too distant future." These same suspicions apply this week as well, and we are heading lower at the moment, possibly riding down the outside of the upper tine of the more recent bright green bearish shift pitchfork. LME 3-month zinc. The one thing that gets me here was not the huge key reversal up we saw last Wednesday. No, it's not that. It is that with this huge daily key reversal, we still did not manage to make last week a more strategic weekly key reversal, or even an outside week. The range, despite being large, did not qualify. Okay, so let's set the scene. 3 weeks ago, I started my commentary by stating the following, and I quote, "This market has exited one pattern, a bear channel dating from April to mid-June, into another pattern, a shallowly rising bull channel from mid-June to mid-August, exited that into a third pattern, a late May to mid-August bullish Andrews pitchfork. I've yet to see if this bullish Andrews pitchfork may morph into a bullish shift pitchfork." End of quote. Well, no sooner had I said that when the bullish Andrews pitchfork did indeed morph into a shallowly bullish, too shallowly bullish shift pitchfork for the same move as the bullish Andrews one, which I've highlighted on my daily chart in bright red. This is not a perfect pattern by any means, but it's still there, especially after last week's actions, with the market between the middle time below, currently at 24.79, and the upper time above. That's where we are currently between those two. The upper time is at 26.44. However, we look at the bigger picture, the market still maintains its position within a very large May to August 2022 bearish shift pitchfork, highlighted in purple on my daily chart. At the moment, between the middle time below, currently at 22.69, and the upper time above, currently at 28.04. Now, I just wish to emphasize how this bearish shift pitchfork is now well over a year old, and it is still working in the overall bigger picture in driving prices lower, despite the recent moves higher. I wish now to discuss the recent somewhat contradictory nature of this market, perhaps seen as indecision, but on a bigger scale than just the daily chart, though we just might be seemingly sorting the situation out now. You see, in the last week of September, we had a weekly key reversal up that almost made it as high as the descending long moving average, currently 26.21. Yet the very next week, we had an immediate countering weekly key reversal down, the one that has led to the break of the bullish Andrews pitchfork in the first place and the morphing into the now shallowly bullish shift pitchfork. This, to me, I saw as indicative of some longer term indecision in this market, much as the recent bullish shift pitchfork counters the longer term 22 dating bearish shift pitchfork. Then we had the monthly key reversal down for October last week, which has not seen any real inkling of a move lower since then. However, the big daily key reversal up last week has seemingly spurred on a move higher, as prices are now not only moving higher within their various pitchforks, but we are seeing the market starting to approach the declining long moving average overhead, currently at 26.21, and a pretty decent piece of resistance it would be. We last did this approach at the start of October, and the market really shied away from testing it. I wonder if it will do the same this time. Finally, I'd like to repeat my last sentence in my commentary from last week, and I quote, "I continue to keep an eye on the bunching together of the flatlining medium moving average, currently 24.50, short medium moving average, currently 24.85, and the short moving average, currently 24.66. These three moving averages are too close together for my liking, and for, I believe, actually the health of the market." End of quote.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.